Hey traders, Raghee here, and in this recap video I'm going to talk about what is the kind of structure, what kind of market structure am I looking at when I'm looking to buy or sell any symbol. What are the clues that'll give me that I see the kind of market structure that I like? And the kind of structure that I like are trends. And I'm going to use the NASDAQ here and also talk a little bit about Google because that's what's happening right now. But this is something that will be applicable for you once you understand how to use these tools. And every one of these tools that I'm sharing with you right now are available free on the Thinkscript platform. They're available for free on the TradeStation platform, TradingView. These are the simpler trading, what I call the TOPS indicators: Wave, Grab, Propulsion, and Darvis. What we're going to talk about in this video specifically is the interaction between the color-coded candles, which I call grab candles, stands for green, red, and blue, grab candles, and the propulsion dots. And those dots are the red, yellow, and green dots that you see on any one of these charts. Now I'm going to focus in on a very short and a very long-term view so you can see that this doesn't have limitation to time frame. And if you're brand new to my work, if you're brand new to the way that I analyze the markets, this is really the best visual shortcut to identifying trends that I know of, have ever taught, have ever used. And I hope you can put it to work right away. How would you do that? If you're on the TradeStation platform, you can head on right over to the App Store and look for simpler propulsion and simpler wave and grab. And you can find these. All right, so next is how would I basically use these? And we're going to talk about the NASDAQ first. What's the structure? What is market structure? Well, market structure is basically, are you looking for choppy markets, consolidating markets, or trending markets? I prefer trending for any number of reasons we can talk about in another video, but I prefer trending. How do you identify a trending market? Ideally, you want to be focusing on a market that has consistency in one color candle, preferably green, because I like uptrends when it comes to equities. And right now I specifically still feel there is upside in equities. I know a lot of people are calling for all sorts of tops. I think they're scaring people out of the market. One thing that we have focused on predominantly at the Simpler Futures site, in the Simpler Futures room, is have a bullish bias. By and large, if you were stuck in a position, right, what would you rather be stuck in, a long or a short? I'm not saying shorts don't work, but generally speaking, they have been getting ripped to shreds because people have been, you guessed it, buying the dips. So how do you know when it's valid to buy the dips? You find a trend. How do you find a trend? Well, I focus on these green dots, which is the interaction between the 8 and 21 EMA. It's really just a new visual for a very old type of strategy, which is a moving average cross. It's the 8 and 21. So rather than looking at these two moving averages meandering across your screen, you wait for the dots to show up. And I want at least 5 dots. And I want those 5 dots to occur while the market's printing predominantly, preferably exclusively, green grab candles. This is why I've been telling my traders, why on earth would anyone want to fade tech right now? It makes no sense to fight the trend. And here we are punching up to yet another all-time high. You can say the same thing about the S&P. If you're an S&P trader, keep an eye on the NASDAQ because of the weighting, especially during earnings season. We just had Google come out. If the NAS is strong, it's likely going to take the S&P with it. The S&P does also have to combat a certain amount of pressure from, say, financials and a certain symbiotic relationship with the Dow. But look, if tech is on fire, don't bet against the S&P. But I would always tell you, look to buy S&P only after you found clarity in the NASDAQ or the Dow. So make the S&P basically the last stop, not the first. Try that for a week or two. Let some of your timing and choice for direction be predicated by what the Dow or the NAS is doing with emphasis on the NAS, especially when we have earnings. So Google gapped up today, as you can see. Take a look at the market structure here, gang. Same process I just showed you on the S&P and on the NASDAQ. Am I looking for the dots? Check. Do I see green grab candles? Check. That's bullish structure. You don't want to bet against that. In fact, Corrections can be played intraday, but think about the longer term trend follow when you have this kind of structure. And here's 3 current markets. And, one of the things I always want you to remember is look at what the market's doing now. I'm not going to be showing you things that happened, 3 weeks ago, predominantly as examples. I want you to see what's happening now. Think about how you can position yourself long in the NASDAQ on pullbacks. Does it have market structure? We can take this same analysis right down to a 1-minute chart and still look for that same kind of market structure across a 1-minute time frame as easily as we could the daily. So just keep that in mind. I'll use the same type of dot and green grab candle analysis. All right. Okay, so I hope that helps. Market structure, there's a really easy way to do it. It works on any time frame. I'll see you in the next update.